of the Gigacast. We are live reacting right after Tesla's earnings, just having had a few moments to digest everything. This was Tesla's Q2 earnings call, and it was an exciting one full of updates about Robotaxi, Optimus, and so much more. Let's dive right into things. Sawyer, Omar, appreciate you guys coming on. You were tweeting up an absolute storm. Omar, why don't you kick it off first with an initial reaction to this earnings call?
Yeah, so this was an interesting earnings call on pretty much every metric. The core business isn't looking great, misses on the top line, the bottom line. We actually saw the cash position decrease a little bit this quarter. But the story was really about a company in transition here. This is a company that just launched their first Robotaxi service. We got a lot of really interesting details on the Robotaxi service, their plans for expansion, some pretty aggressive targets. I mean, he talked about expanding Robotaxi to half of the US population by the end of the year. I'm still trying to do the math on how that even works out, or if that's possible.
I was wondering the same.
Yeah, 175 million people.
Right, and they want to expand FSD to customer cars by the end of the year. They want to expand to new cities. They talked about dramatically expanding the Austin geofence in just a few weeks beyond what current competitors, namely Waymo, are offering. So we got some pretty exciting outlook on the future. But at the same time, the core business, something just isn't working. Something needs to change. And really, a lot of the problems, losing the tax credit, political sentiment, were really actually driven by Elon's political activity. Hearing that, FSD supervised, and, 1 billion miles in a quarter, that's amazing, right? But hearing that even since V12, they've only grown subscriptions about 25%, it definitely seems like there's a lot more that could be done there, that if they can get that engine of the business going, it might flow forward into deliveries of vehicles too.
Sawyer?
Yeah, so the earnings themselves weren't great. Obviously, the core business, as Omar said, isn't doing well. Total revenues down 12% year over year. EBITDA down 7%. Net income gap down 16%. EPS down 18%. And so, unfortunately, like, Tesla's a publicly traded company with the pressures of having to perform quarterly. And I think the way Elon likes to operate is to set a long-term vision and set a multi-year sort of roadmap. But that kind of means some bumpiness in the near term. And as Elon said, they're sort of in a weird position where a lot of incentives are ending in the US, and specifically the EV tax credit. And that sort of created a situation where there could be a lot of demand heading into the end of the quarter, but then Q4 could be a little rough. And Elon even said Q1, maybe even Q2 could be rough of next year. And I didn't find that there was much substance in the slide deck nor the earnings call. Everything was kind of vague, and we heard there were a couple of new tidbits of information on the earnings call itself. But I think one important thing that investors were focusing on was the product section of the slide deck, where Tesla sort of addresses the more affordable models. And they said, our focus remains on prudently growing our vehicle volumes in a CapEx efficient manner by using our existing vehicle production capacity before building new lines. Now, we already knew that, but then they go on to say plans for new vehicles that will launch in 2025 remain on track, including initial production of a more affordable model in the first half of 2025. So they already started some sort of pilot production in June, it sounds like. What's interesting is they say of a more affordable model, not plural, not models. And I think they said models in previous earnings reports. So this looks like maybe it's just one model. I don't think they're referring to the new Model Y L, the longer version of the Model Y that Tesla China sort of teased a few days ago. My guess is this is probably just like a sort of a stripped down version of the current Y. And then they'll have sort of a trifecta of Model Ys, the very cheap version, the stripped down version, the current version that's already out, and then the larger Model Y L version. So people will have sort of 3 Model Y SUVs to choose from. And then they go on to say our purpose-built Cybercab and, remains on track for volume production starting next year. Fortunately, Tesla Energy is a bit of a shining star for them. Hit record income or profit of, I think, $880-ish million. Gross margins were 30.3%, I believe, which is, I think, a multi-quarter high. And I think that's partly can be attributed to Tesla's Shanghai, or rather Megapack Shanghai, their Megapack factory in Shanghai that they opened earlier this year. I think ultimately what people want to see going forward is just continued progress on Robotaxi and Optimus. I don't see the vehicle business getting much better in the coming quarters. Maybe like the more affordable models or model will help that somewhat, but my guess is no. If you had told me like 2 years ago, a few years ago, that Tesla's sales would go from 1.8 million vehicles in like 2023 to 1.5 or 1.6 in 2025, I would call you insane. So it's pretty unfortunate how weak the core business is. But I think we can expect a lot of good developments on the Robotaxi front and on Optimus in the coming months and heading into next year. And Elon predicts that at some point in the second half of next year, the Robotaxi business could start to be, materially impactful to Tesla's financials, which is a big statement. And if that's true, that's great news, because the financials haven't been great the last, year or so, or a couple of years. We could probably dive into a little bit of what he said on the call, maybe, if you guys want to get into that. But I don't know if you had any other things you wanted to cover.
Yeah, I just was going to say that I agree with you. I don't think that the Model Y L would necessarily be more affordable. In fact, it's probably going to be more expensive with that extra row in there. So that's not what I believe he's referring to. But it does make sense for the more affordable vehicle, especially now that they're creating the Model Y L, to just be a stripped down, because this way they can, take that chassis and kind of have those 3 different versions. And why not take your most popular car in the world, or the best-selling car, right, and say, hey, let's just triple down on this. Let's create a longer version. Let's create a cheaper version and just build around what we already know is already working. So that definitely made sense to me within this area. I also just wanted to ask a quick question, and maybe this is already getting into what he talked about on the call, but one of the things that was mentioned per the takeaways that I was seeing was that Optimus is, within 5 years, he talked about they would be at 100,000 Optimus per month being created, and saying that this will be, the biggest product in Tesla's history, and that this is the moving forward. So we talk about, core product right now being the cars. How fast can something like that change, and how big of a focus is Optimus coming into the picture, which is a different area than FSD, but, utilizes a lot of the similar pieces.
Yeah. Optimus is probably not going to be material within the next few quarters, obviously. If you just look at some of their projections on the early earnings call, they said, well, we want to produce thousands of Optimus robots this year. Now it sounds like they've kind of gone back to the design stage. They've made some improvements they wanted to see, and now they're aiming to get it into volume production next year. So really, as much as we're talking about all these other areas of the business, auto sales are going to continue to be the focus for the next several quarters. And it is interesting what they said and didn't say about these new, more affordable vehicle models. They say they've started production, that it's ready. They did mention it's going to be starting in North America, but they said very little. They didn't mention the Model YL. They didn't give us much details on these new, more affordable models. I think it's pretty clear that for this quarter, they want to really focus on churning out Model 3 and Model Y that qualify for the credit, not ramping up some new product and slowing down the production rate and the available inventory, just producing through as much inventory as they can, clearing out the Model 3 and Y. And then when you lose the credit next quarter, bringing out this new, more affordable model. I think we have a pretty clear indication of what that's going to look like. You've got the Model YL that's slightly bigger. You've got the Model Y, and this is going to be some type of lower end Model Y that comes in cheaper and helps bring in some of that gap. So, really when I look at the situation with Tesla, the lack of new models is probably the number one contributor to the slow growth or really the contraction in sales. Tesla's vehicle sales have really traditionally been expanding due to new vehicle models coming. I think if they had done a big 3-row SUV or some other popular vehicle segment, they probably could have seen a lot stronger growth. But instead, they did the Cybertruck. They did some revamps of their existing models. We haven't really seen anything new, even though there have been a lot of competing EVs come onto the market. And that, I think, is really the primary reason why you're seeing sales expand at a slower rate. So they made some choices. They chose to invest in autonomy rather than, say, investing in a van or a 3-row SUV. And I think that'll ultimately pay off long term, but right now it's put them in a position where it's tough to grow with the existing lineup. You know, why would someone not go buy a used Model Y at a fraction of the price rather than buy the new refreshed one?
You're muted, Sawyer. Sawyer, you're muted. Yep.
Sorry, I was muted. Tesla CFO Vaibhav, he did say something that was interesting. I don't think they've ever done this before. And that on the call, they said the company has already rolled out all of the vehicle incentives it plans to introduce in the US in Q3. And that at the end of the quarter, as the end of the quarter draws closer, they're going to start removing some of those incentives due to the limited supply. I don't think they've ever said that. And I think they're a little bit worried about people waiting until September, like most people do, because that's when Tesla typically has its strongest incentives. And I think they're just telling people, look, we're not going to have like 0% APR for the Y or like whatever. Everything we've introduced. So go get your Tesla now if you want to take advantage of that EV credit. So I think that was important messaging for them to have. But yeah, I'm trying to think what else was interesting on the call.
Well, let's maybe go through some of the quotes. What was any moment or two, Sawyer, that Elon said to me, we were like, oh, like kind of like a bigger reaction to something in that moment?
I guess a couple things. One is that 50% number. If you scroll down near the beginning, they plan to expand robotaxis to cover 50% of the population in the US by the end of this year. Like that's a huge statement. I'm not sure how as Omar said, I'm not sure how the math works out. If you do like California, like San Francisco, LA, Austin, Phoenix, maybe Orlando or Miami, maybe, I don't know. I got to do the math. That seems 50% seems like a lot, but that's the first time we've heard them mention Florida recently. So that's good that they're working on that. The other thing was, I'm trying to remember.
We're going to need more than 11 cars.
Yeah, a lot more. Hardware. So one of the questions was, what's going to happen with hardware 3 owners? And this has been something that so many people constantly ask, certainly Omar and I, but also many others, the Tesla team, in that it sounds like they don't really have a plan for hardware 3 owners yet. They're just going to wait until they solve or release FSD unsupervised, to the general public. And then they'll come up with a plan on what to do with hardware 3 owners. Elon had teased a year and a half ago at the 2024 annual shareholder meeting that hardware 5 would come out maybe late 2025. Elon just said on this call, he says volume production in late 2026. So I think it's safe to assume maybe that slips to like early 2027. So there are so many people. I get DMs every single day asking, should I buy a Tesla now or should I wait until hardware 5 comes out maybe in a few months from now, early 2026? And I think Elon is just telling people like, look, just go ahead and order your Tesla now. And, if you need hardware 5 to like be able to achieve, unsupervised FSD or robotaxis, then it's likely they'll just upgrade you for free if you've bought FSD. So curious to see what that does for demand. That in the short term, people aren't going to be waiting anymore until Q4 or Q1. So Q4 is going to be really interesting. You have the loss of the EV credit, the introduction of new models. Can they ramp those things up fast enough? It's going to be super interesting to see how that goes.
Omar?
Yeah, I definitely think the AI4 car, which is what's powering the Robotaxi service today, is incredible. Sawyer and I use it on our cars. It really drives phenomenally. It's almost certain that it's going to be capable of unsupervised. So even after AI 5 comes out, it's going to take really 12 to 18 months for the software to be upgraded to use the extra capability of that hardware. So AI 5 being useful for self-driving in any way over AI 4 is really a few years away. And I definitely wouldn't worry about getting the car. So I think that's kind of a really important takeaway. You know, one thing that also stood out to me on a technical level is Elon talking about a 10x larger model for AI 4 cars. As the model gets bigger, if you can squeeze it into the hardware, the model just becomes much more intelligent. It drives much better. A 10x increase is like nothing we've ever seen before in terms of an FSD update. I would expect the AI on the car, once they have this 10x larger model out, to be significantly more intelligent than the current FSD. So much so that it makes the current version look kind of primitive by comparison.
So one thing that stood out. Oh, sorry, go for it. And then I have a question.
No, I mean, this is just more on the FSD front. Elon said that 50% of Tesla owners that could try FSD have not tried it even once. Like that's awful. Like FSD is great. Huh?
Why do you think that is?
Because you have this incredible technology. It's very capable today, at least in hardware 4 vehicles. And it probably, I don't know if half the fleet is hardware 4 vehicles yet, but it's probably like 3-4 million at least. And a lot of people are saying, well, a lot of those vehicles are just hardware 3, but a lot of them are hardware 4. Like hardware 4 has been out for what, 2.5, 3 years or something. So that tells me that Tesla is like not doing enough to address this sort of knowledge gap between people thinking like the people that know what FSD is and try it and the people that just really have no clue. Like it's pretty wild that people own Teslas and have never even thought about or wanting to try FSD, especially if they live in the US, like where it's available and performs really well. Tesla, I don't know what, besides like actual advertising, I'm not sure what Tesla needs to do. Maybe just like a big pop-up in the screen, be like, hey, try it for free for 30 days instead of just something buried in the settings, like free 30-day trial. Like really just throw it in their face. Like just try it. Tell people to just try it for free. I don't know what they need to do, but more than what they're doing now.
Yeah, this is really interesting. I mean, on one hand, we did see a billion or nearly a billion FSD miles driven in the quarter. That is an enormous number.
The daily average was an all-time high in Q2. So the people that use it are using it more than ever. It's just the people that have never tried it aren't, for whatever reason, trying it.
You're starting to see that addictiveness. The usage is increasing, but there's so much untapped potential. It's crazy. And just anecdotally, you can look around, you see other Tesla drivers, they're all driving manually. So this is an epic marketing failure. You know, we can talk about how robotaxis are so great and da-da-da, but why is the subscription rate actually not increasing? What are we doing wrong here? And what can we do to actually increase this, to get people to use the technology more? I think one of the things you have to look at is the price. So it's $100 a month subscription. I think what they're generating is really peanuts because of how low the adoption rate is, how low the subscription rate is at $100 a month. You know, that's $1,200 a year. It seems a little bit silly to be focused on trying to milk $100 a month subscription out of the user when we really need to be focused on just getting adoption as high as possible. So, you know, could adoption be 4x what it is now at $25 a month? Maybe that's something they need to think about. Maybe they just need to give it free to everyone for a little while to help increase adoption. I think there should be, you know, they recently launched an onboarding guide. There should be an FSD onboarding guide demo built into every car for free. Whether you're paying for FSD or not, you should be able to just push that button without paying $100 and get a demo of FSD. Maybe it picks a destination and drives, teaches you how to use it, teaches you how to use the driver monitoring system. That I think would help new users a lot. Right now, there's friction for new users. They're not picking up how to use it. And the third issue that they kind of mentioned was the driver monitoring system. It's so strict about people using their phone that people are actually turning it off, doing something dangerous, and then turning it back on, which kind of defeats the purpose. It's almost kind of a negative to safety. So I think scaling that back, which they kind of talked about a little bit in the call, if they make it a little bit easier, less annoying for users, that could be something that could make a big difference as well.
Yeah, all good thoughts. Even though 50% haven't tried it, it was mentioned on the earnings call that adoption of FSD has increased 25% since V12 launch and with new lower subscription pricing. So just a couple pieces to go over there. But yeah, I think for a lot of people at $100 a month also, Omar, it kind of becomes a, well, how much do I really drive type decision. And if you're someone like me that, you know, you drive very little, I just basically drive to the gym and to the grocery store. So I'm driving maybe 3-4 times a week, but not for very long. It becomes, okay, do I really want to spend $100? And, you know, if I'm driving a ton, it's a no brainer, but it's one of those things where I think you kind of have to weigh out your different options. So it's a good point.
Yeah, that's an interesting thought. I mean, I think different pricing models could be interesting to look at. Maybe if there was a usage-based pricing or something. I mean, what they really need to do is get people hooked. Lower the barriers enough that people get hooked.
Right.
As the functionality improves, as it allows you to use your phone, as they launch unsupervised, as they launch adding your car to the fleet, you can increase that revenue over time. But right now, I think it's a barrier that's stopping a lot of people from using it. So yeah, maybe some new pricing models would be helpful. Maybe 1 or 2 drives a day free would be a good free offering to have.
Yeah, kind of. I'm trying to think of exactly what it reminds me of, but there's so many places that have done this, like Uber, for example, just as a topical example, right? Uber supplemented with VC capital, got people hooked on this idea of using Uber, super cheap rides. Then they made them more expensive. And guess what? We also pretty much take Ubers, you know, for the most part. And it's just a similar concept there. So yeah, I like that, getting people onto it. Evan, in like 2 minutes, if you have any questions that you want to pull, you can throw them in the chat and we'll refer to those. Just looking through to see if there was anything else specific that stuck out.
I'm really looking forward to them expanding the Austin, Texas geofence. It sounds like in a couple of weeks. We've seen a bunch of photos of validation Model Ys rolling around all types of areas around Austin, far away too from the current geofenced area. So it sounds like it's going to be a pretty large expansion, which is exciting.
That was actually one of my questions. They mentioned that personal, people's Teslas, your everyday Tesla is going to, for some people in certain geographic areas by year end, have unsupervised FSD, which I think would make a huge difference to what you're saying there, Omar, with people getting a little bit worried about, hey, I can't use it for things. Omar, realistically, you're somebody who's been on the beta testing cutting edge of this. Realistically, when do you expect your Tesla to be able to have unsupervised FSD?
You know, that's a tough question. I think if they launch their Robotaxi service in California as planned, it'd be easier to kind of see when that might be possible from a regulatory perspective. But if you look at what happened in Texas just this last quarter, they delivered a car to a customer autonomously. It drove from the factory to their house. Then they updated the software and put the standard software back on that car. But it could just as easily be upgraded to use FSD supervised. Now, the software needs to be really safe, no safety monitor required. So once you see them remove the safety monitor in Austin, probably a few months after that, you're going to see them actually be able to add FSD unsupervised to customer cars. And as usual, you want to add a little bit of Elon time in there. I think maybe Q4, Q1, maybe Q2, if it turns out to be a little bit tougher. But I think we're a few quarters away from that. And that's something that nobody's ever done before. Waymo, of course, has millions of driverless miles, but nobody's actually done a self-driving car that you can buy and use for your own personal use. So if Tesla can get that done, and they look very close to doing it from what we've seen with the autonomous delivery. That's a huge milestone and a huge selling point that nobody else can match.
Got it. One last piece, and then we'll see if there's any questions that we would like to take. And this will come over to you, Sawyer. They talked about CapEx, expected to exceed $9 billion. What do you think about the ways that their expenditures have been growing? And what's your thoughts on how they're allocating it?
I actually think it was supposed to be higher for this year. I think, didn't they project like 10 or 11 or like earlier this year or maybe late last year?
Maybe
could be
having
wrong
less
on
cash
that.
on hand reduces that.
Maybe, yeah. But they're building Cortex 2.0 right now, which is supposed to be either the same size or an even bigger GPU cluster. So I think that's where probably most of that's going. Also, they're also going to start production on, these more affordable new models. So that's probably where most of that is going. But yeah, so 11 billion. There you go. So it's come down to 9. That's interesting. But they said in October last year that was 8 to 10. So, or no, 8 to 10 in 2026. Interesting. Okay. So maybe they're being a little bit more conservative than they thought they were going to be.
Yeah, it's interesting with their GPU cluster. They do seem to be, I think we had expected to be over 100,000 units. Like Sawyer said, they mentioned 67,000 units.
It's going kind of slowly. Yeah, the expansion.
It is a little bit slower than expected. And, you get the sense that given what's going on with the automotive business, they don't want to swing it into a loss. So they're managing their CapEx spend. It's starting to feel like there's some constraints on the business as a result of this decline in sales. The CapEx they need to spend on the GPUs, the fact that they've chosen to focus on expanding vehicle deliveries through investment in their existing lines as opposed to brand new lines, that's a decision to conserve CapEx and really be able to put more into the GPU cluster. So again, just really focusing on expanding the core business. As much as people want to say it doesn't matter, if you can just sell more cars, if you can utilize those existing factories, that allows you to invest more in GPUs, in new vehicle programs, and all the things that are really important to us.
This is why it would have been maybe not great to have XAI within Tesla right now if it were built within Tesla, because the capital needs would have been so intense. Like from rumors, reports online that XAI I think is burning through over $1 billion a month just on like GPUs and infrastructure needs. So if you had that within Tesla, Tesla makes $7-ish billion a year in that income. Meta at 40 billion, Google at 100 billion-ish. XAI right now is building a $20 to $25 billion GPU cluster, the largest in the world. The amount of capital that they need is much easier to raise as a private company rather than if they were in a public company. Yes, they could have like issued new shares, but that would just to dilute current shareholders if they were within Tesla. So I see why Elon wanted to sort of make it its own separate entity for various reasons beyond that. But, that's one of the biggest ones.
Yeah, this is a really important point to understand because I think a lot of people see it as some betrayal that he kind of went and started XAI. If XAI was part of Tesla, it would have swung the company into a loss. If they want to keep the company as a profitable company, which I think they do, XAI can't be part of it at this stage. Now, maybe at some further junction where XAI is profitable, you could consider bringing them closer together. I think they're looking at an investment in the short term. But Elon is kind of creatively using these separate entities in ways that I think are beneficial to his entire business empire. You're now seeing Grok integrated into the vehicles, into the cars. They're getting a lot of the benefit from this investment without having to actually go and spend billions of dollars themselves. They're able to focus their compute resources on FSD and not training an LLM. And I think that's probably the right decision for now.
Yeah, really hard to be unprofitable and be $1 trillion company. Market cap wise,
Yeah.
certainly. Those two things are a bit of an oxymoron. Okay, last thing I'll actually ask Omar on, and then we'll just take one or two questions. Evan, any that you want me to hit on, just drop into the studio chat. Just last thing, a fun thing to touch on. Omar is repping the Tesla Diner shirt. Tesla Diner opening, was it last night or 2 nights ago? I blanked.
I think 2 nights ago, yeah.
2 nights ago. Coming out, pretty cool stuff, you know, showing off the menu, getting people together, Superchargers movies. You were one of the first people there. And of course, the infamous Whimo Gate escapade. So we'd like to just address this for the audience, Omar, and just talk a little bit about, you know, what happened.
4.1 million views.
Yeah, this was a big controversy. I was getting texts from friends and family about this. I was spotted by the paparazzi leaving the Tesla Diner in a Waymo. You know, I do actually take Waymo. I take Waymo when I don't want to park somewhere. And there was a 10-hour line to get into the Tesla Diner. It was insane. So I showed up at 7 a.m., told this guy, hey, you know, save my spot for me. And I went and I took a nap. I came back at 4:20, you know, 9 hours later. And people had literally been waiting there the entire time. So I just came in a Waymo. I snuck into my friend's car. And then I left in a Waymo as well, which I guess, you know, it is kind of ironic to show up to the Tesla Diner in a Waymo. But unfortunately, there's no Robotaxi in Los Angeles yet. And people were also making fun of the way I got into the car, but I was just trying to make room. I didn't know I was being filmed. So next time I'll, you know, try and look more cool getting into the car in case there's anybody watching me.
It's funny.
They're always watching. Yeah. And then just to the diner itself, you want to talk for just a minute about the experience?
Look, Tesla has the best charging network in the world. I think this is really the crown jewel of what they're kind of wanting to do in the future. And I would definitely recommend visiting if you've got an EV, or even if you just want to eat there. It's open 24/7. So it's really fun. You know, they got Optimus there serving people. It's just a really great place to charge. You know, like I said, Tesla has the best chargers in the world. One other thing that I think we didn't mention was Adam Jonas's question to Elon about his sort of desire for more control of Tesla. It sounds like he hinted at something that was coming up at this shareholder meeting for a vote. So I'm very interested to see what that's going to be. I think a lot of people had speculated with the delays that there was going to be something to that regard, but he kind of articulated his fear as, well, you know, what if I create this swarm of robots and then I get fired by the shareholder base, and you know, someone evil gets control of this robot army or something, which is kind of an interesting argument to make. But I think he's pretty clear that he wants greater voting control of Tesla, whether that's done through issuing shares or through super voting shares. It seems like this is going to be something that comes up, and will probably be a vote that will generate some controversy like his last compensation vote. One way to get him more control could be a share exchange with XAI. So we'll see what this happens, what the vote is. There were also a few questions about XAI, but the Elon compensation drama continues.
Usually Adam Jonas asks like a LiDAR question, so I thought he asked a pretty good one this time.
It felt like none of the questions were really that good. I mean, not good, but bullish for shareholders. Every question was like, oh God, they're really opening this can of worms. We got to be talking about, you know, the 25% or something like that. So there's a lot of challenges in the near term with the credit expiring. You know, he gave that answer. Yeah, sales might not be good. It's like, that's not what you want to really be hearing, but, you know, I guess it's the truth. But we're really in this situation because, in part, Elon helped get Trump elected. So there's kind of this irony there that what he's been spending so much time on has actually become kind of a headwind in the next few quarters.
Yeah, they didn't even really address that much. The ZEV credit situation, that the bill gets rid of those, or rather the system that creates the demand for the ZEV credits. So that's a lot of sort of free income for Tesla that's partly going to be reduced. There's other parts that they can get it from elsewhere in the world, like the EU and whatnot. But yeah, it's gonna be a tough few quarters, that's for sure. But I think long term, things are setting up well. Progress has been good on the Robotaxi front. Just today, we got news that Nevada, Tesla's had initial discussions with Nevada about potentially expanding there. Nothing else beyond that point, but it's good news that they're continuing to make progress on this. So hopefully that continues.
Yeah, I mean, I think these things can ebb and flow politically, especially here in the United States, where we tend to have different attitudes towards things and more positive views of fossil fuels. But generally, I think the concept of taxing people who pollute too much is going to be here to stay. But at the same time, yeah, the focus is less and less on credits for keeping the air clean, subsidies for buying an EV, and more on this autonomous future. So I think that's going to continue to be the focus, and hopefully the business will become less dependent on these types of political issues.
You said you weren't exactly a huge fan of the questions that were being asked. What question would you have asked if you were on the earnings call?
I thought the questions were good, but they really hit on a lot of sort of near-term challenges, right? The issue with Elon's compensation, the tax credit, all these things, each of these is a whole can of worms, right? And maybe if you wanted to kind of get the investor base in a good mood, you'd be focusing on some of this sort of exciting stuff like what's happening in Austin. But there are, a lot of issues which some of the analysts brought up.
Sawyer, any question that you would have asked?
I thought the retail questions were actually pretty good. Yeah, this was a better set of questions than we've had in the past. The compensation, or the question about Tesla investing into XAI, they obviously weren't going to address that now, but I do think that'll probably be on the shareholder proxy for November, which we'll probably learn, I think the proxy comes out in September, if I'm not mistaken. So we got a couple months to go, but it'll be an interesting shareholder meeting, that's for sure.
Absolutely. All right, we're just going to take one question, I believe, from the audience here, and then we'll wrap. Question, I believe, is from Matt. Lots of robotaxis need lots of superchargers. What's the plan? I heard Austin's Model Y robotaxis had private charging locations.
Well, long term, like the cybercabs they'll just be a big lot with wireless chargers, and they'll just hover right over the wireless charger. You won't need anyone to physically plug it in because there is no physical port. There's no charging port on the cybercab. With the Model Ys, yeah, you'll probably, I don't know if Tesla will do this or if they're sort of outsource it contracting wise. But someone will have to plug these things in at night at some big lot somewhere. But right now it's only a fleet of 11. So it's really not that hard for them to manage. But as it grows and gets bigger, it'll be interesting to see if they just sort of manage that themselves. They certainly have a lot of, Tesla service centers and stores everywhere. So maybe they do it in collaboration with that. But my guess is they'll probably have to find like big parking lots somewhere or whatnot and charge that way.
Yeah, I agree with Sawyer. And I think at the end of the day, if you really want to flesh out this vision for a global robotaxi network, you do need a lot of chargers built and a lot of charging infrastructure built, wireless chargers built, of which there are none today. So it really plays to Tesla's strengths. A lot of people, when we're talking about the robotaxi wars, they say, well, do you need LiDAR or do you not need LiDAR? When in reality, winning is so much deeper than that. It's having a global service network. It's having a global charging network. It's actually producing the cars close to where they need to be sold, having software that works in all of those places. So I think Tesla's supercharging team, which is really the best EV charging team in the world, it's really a crucial aspect to their robotaxi ambitions. And I think it's going to be a whole new generation of superchargers for the autonomous world.
Very nice. Sawyer, what are your Twitter notifications like right now?
Some people are complaining I posted too much, and some people love that I posted that much. That's basically it. No, I'm kidding. I mean, there was some of that, but yeah, it's just everyone giving their thoughts on sort of what the call was like. Some people are kind of disappointed by the call. Not much substance in it, but you're going to have that once in a while, right? Every call can't necessarily be a banger, right? So,
yeah.
Yeah.
Final question. I believe this is coming from Evan. All right. So, Robotaxi, will there be a change in the charging model and how long the cars can last and pricing and pieces like that because the cars have a slower top speed and less acceleration? Do you think that that changes some things?
I think the robo-taxis are going to have smaller batteries. So a Model S today has a 100 kilowatt hour battery. That can go about 400 miles. The robo-taxi you're going to see have about 50 kilowatts. So with one Model S battery, you could make 2 robo-taxis. And that'll still probably get you around 300 miles. So for going around the city, they'll just drive around, they'll charge, you'll never worry about how much range they have. For long distance travel, you just get from one robo-taxi into the next one. You don't have to wait for it to finish charging. Or you can wait for it if you want to eat food or whatever. So I think what you're actually going to see kind of counterintuitively is smaller batteries and more efficient vehicles.
Omar, do you think the Cybercab is going to use LFP batteries from Tesla's new Nevada plant, or do you think they'll use some sort of maybe third generation of the 4680 cell in-house?
It's a good question. I think they're going to design it to use multiple battery chemistries, but the backbone has to be LFP because it's the only thing that can really scale to the volumes they want. I imagine they would love to use Tesla LFP, but my understanding from listening to Limiting Factor and others is that the LFP they have there is probably more slated for Megapack immediately. Longer term, I bet they would want to use it in their more affordable models, including Cybercab.
On the report that it was going to be for energy storage, and I guess that is probably only a 10 gigawatt hour facility, so that wouldn't be enough for the Cybercab. So yeah, forgot about
that. Energy is the more pressing thing because I mean, energy is the one part of the business that's actually growing. That's not either shrinking or some far off future thing. It's the one good part of the business. And now you've got these tariffs that are really putting that in jeopardy. The LFP made by Tesla in Nevada is going to be really critical for insulating Megapack from tariffs and the loss of the 30% solar and battery credit.
Good stuff, guys. I know y'all have had long days, so appreciate you coming on and doing a live stream here in the evening. The chat, by the way, Sawyer, supports you tweeting more. That seems to be the consensus.
You know what's funny? I think a lot of the times the algorithm pushes a lot of my posts, but I actually only post an average of about 12 times a day. And so, but obviously on earnings call days, I'm going to post, like 50 times because there's a lot to cover. So these are the heavy days.
Yeah, it was really good stuff. Thanks everyone that tuned in. We had a nice little 300 concurrent here on YouTube watching, like 17, 18,000 on X. Love to see it. Omar, any final comments for this one?
I think this was a Band-Aid that we needed to peel off. Nobody was excited about this earnings print from a financial perspective. Nobody said, I think they're going to pull out a massive beat for Q2. Yeah. This was something that we wanted in the rearview mirror. And we've gotten through it without the market totally cratering on Tesla stock. So I think people are looking forward now. As we look forward into this quarter, we're going to see a pull forward in demand from the reduction of the credit. We're seeing the introduction of new models like Model YL. We're seeing FSD expand. You saw all those international locations, London, places in Europe. There's a really exciting future for this company. And hopefully they can start to pick things up in the third quarter here.
Absolutely. Sawyer?
I think it's going to be a rough couple quarters. My guess is Q4 we'll see record amount of incentives just so that Tesla can deliver every last car that they can. Obviously, that's when the more affordable model will also be ramping up. So that'll be interesting. But I think as long as we continue to see progress, continue to see geofence expansion, and get some indication of when those safety monitors are going to be out of the cars or the robotaxis, I think that's what really matters more so than the short-term vehicle sales, even though that's where I know, or that's where most of the profit comes from. Ultimately, Tesla is a story of robotaxis and robots. So they just need to continue to give good progress updates on those. But it's going to be a rough 6 to 9 months. I think I agree with Elon on that from a vehicle sales standpoint. But the energy business, I think, will continue to kill it.
Yeah, the energy business definitely continues to stand out. Story of robotaxis, robots, and really interesting Elon quotes.
Actually, on the energy storage front, so Tesla, or not Tesla, XAI's Colossus One data center used about $150 million worth of Tesla megapacks. It sounds like, well, based on what Elon is saying in terms of Colossus 2 being at least 500 and what did he say, 50,000 H100 or GB200 NVIDIA chips equivalent. My guess is Tesla will end up having to send roughly maybe $400-ish million worth of megapacks to that data center, unless they're way more efficient, the chips themselves, which they might be. I have to look into that. But regardless, it's going to be a lot of Tesla megapacks going to that facility. And I think we'll continue to see synergies between XAI and Tesla as the months and years go on.
Absolutely. Yeah, there's a ton of synergies across the companies here. Grok, kind of that first integration, really, but just the start. That's going to do it for this special episode of, oh yeah.
Let us know how you guys like the live format. We typically do pre-recorded episodes, but let us know what you thought of the live format.
Yeah, especially, after stuff like earnings calls or events and things like that. I think it works well. Interesting comments throughout. All right, appreciate everyone tuning in to this special live episode of the Gigacast right after Tesla's earnings. We'll be back, as always, next week as well, towards the end of the week. Excited to see what happens in the meantime. We will cover it here on the Gigacast. Please subscribe to the YouTube channel if you're watching here on YouTube. If you're on X, follow the X channel, and then move your way over to YouTube and subscribe on YouTube as well to the Gigacast. We'll see you on the next one. Appreciate everyone who tunes in, engages, and makes this possible. Have a great one, everybody.